banker is a fellow who will give you his umbrella when the sun is shining and ask for it back the moment it starts to rain.
Welcome to the Business Behind Your Business, conversations to help your business grow and thrive. Hi, I'm Paul Sweeney, founder of Pretium Solutions, chartered accountants and certified business advisors, hosting the Business Behind Your Business. So today we're looking at some aspects of borrowing for business, and today I've got Jason Smith from Capital Plus Finance with me. So Jason, tell us a bit about you.
G'day Paul, thanks for having me. So I am the Director of Capital Plus Finance. We've been around for a little bit over 2 years. Basically what we do is we help most Australian businesses, whether they're small or medium or large, find the best finance solution for them. So that might be cars, vans, utes, trucks or trailers or plant machinery. And we go out there, we source what's the best finance, we do all the heavy lifting for them. So we take the pain out of it, the hassle out of it, and ensure that they're getting the best price.
That's great. So I guess when people come to think of finance, though, they still tend to think of the banks as where you go for finance. Is that still the case now, or are there alternatives?
Well, there's a lot of alternatives. Look, businesses still do think about the banks. I was just talking to a client of mine the other week who's been with a particular bank for over 20 years, and he wanted a $40,000 ute, and they said, "Sorry, mate, we're not doing it during COVID-19." He said, "But look, I've never missed a beat. I've been here 20 years," and they said, "Sorry, we can't help you." So there's a bit of that goes on. So as a broker, you work with a large panel. So our panel's about 60 lenders, all the mainstream banks, but then the second tier lenders and the third tier lenders. And it's really important to not deal with one bank. Not all banks have the cheapest rate, or whether it's a mortgage or whether it's vehicle finance. So it's really working out who's who. Who's going to take 6 weeks to say no, or who's going to take 4 days to have it approved and settled. And that's the job of the broker.
So I guess from a business point of view, having a broker doing all that heavy lifting for you will save a lot of time and give you access to finance that you may not have even considered, particularly if your current bank doesn't lend a particular style of finance that you need, or in a particular set of circumstances like we're going through at the moment. So I think the alternatives to going straight to your bank is there seems to be still that expectation that I've been banking with them for a long time.
Yeah.
I'm entitled to a loan with them. Does that hold businesses back?
Yeah, look, I think it does, and I think that's changing. There's certain banks out there that are really good at doing a low doc finance under 50,000 or under 70,000, and there's banks out there that don't want to do that at all. There's some banks that do debtor finance, for instance, and some that don't. So it's really a matter of understanding what the client's looking for, what the business is looking for, and saying, well, look, what's important to you here? How quickly do you need this turned around? What's the structure that we're looking at? Is it 3 years, 5 years, and what sort of monthly repayments are you looking for? So look, I encourage clients, if they've got their financials up to date and they have no tax arrears and they're property backed, which is important for if you want a low doc finance, meaning that there's very few financials involved. It's important that your ABN's been around for 2 or more years and that you're property backed. If that's the case, we've got a lot of choice. But if it's not the case, we're not going to be dealing with the bank. If the credit file isn't too flash, we won't be dealing with the bank. We've got to deal with the second tier lenders.
Yeah, and so you mentioned having everything up to date, like your financials and your tax returns and your no tax arrears. A lot of people wait till they're in trouble, into the cash flow trouble, before they actually look for finance. Is that the wrong time to be looking for a loan?
I think so. I think the horse has bolted when that's happened. So we do. Apart from asset finance, we do a lot of debtor finance as well, because that's my background. Is I used to run a debtor finance company before I got involved as a broker. So look, that's what I think is important about understanding your profit and loss and understanding your balance sheet, and not having to know the ins and outs, but just knowing, right, I have equity on my balance sheet, and right, I've made a profit this year. and yeah, this is where accountants play a pretty important role, is that having that information up to date. And understanding that you are going to have a cash flow issue, or you're not going to have a cash flow issue, and everything's fine. So I'm not sure if that answered your question, actually, Paul.
Look, I think so, because I think there is that expectation, or traditionally there's been an expectation that when I'm in trouble, the bank will be there for me. And I think we've seen a change over time that that's not the case. The bank is in business for the bank. It's not in business for you. You're their customer. They're trying to make a profit from you. So they're also trying to protect their position, which they've come under a lot of fire in the past couple of years because of their lending policies. So they've tightened up. So I think by being well prepared, you do give yourself the option. So you talked about planning. So planning for your cash flow requirements, and how are you going to support that loan? I think that would increase your chances of securing finance. Has that been the case? Is there more a need or a request for forecasts and cash flow?
Look, it's not so much forecasts if we're purely looking at asset finance, but there's really no such thing as a low doc asset finance loan now. So if you're going for a car or a truck or trailer or van, ute, whatever it is, it used to be, if you're property backed, if you have an ABN that's been around for 2 years, and you've got a good credit score, then how much would you like? And it was very, very streamlined, very, very process driven. Now it's they're looking at your bank statements no matter what. All right, so there's that bank statement software that most lenders use now, where they're running it through a process of going, yes, we're okay to do this, or we're not okay to do this. And then if they're not quite happy with what they see with the bank statements, they're then looking at financials. So banks have really tightened up, no matter what our Prime Minister's saying about loosening the flow of credit to small businesses, and no matter what the statistics from the ABA are saying, on the ground level, banks are just as difficult to deal with. This SME loan guarantee scheme, we've talked about this before, Paul. Look, they've lent billions of dollars, but geez, I tell you what, they've said no to 5 times as much, and basically forget about getting an SME loan guarantee scheme. If you had any sort of trouble with profitability prior to COVID-19, it won't happen, no matter how much the government's guaranteeing that. And I just better tell you my favourite quotes about bankers, and I think it's from Mark Twain, and we won't do much bank bashing. We'll move along after that. But Mark Twain, I think it was Mark Twain, he said, a banker is a fellow who will give you his umbrella when the sun is shining and ask for it back the moment it starts to rain.
Yep.
And that's that's always how it's been, and it's how it is more than ever now.
So it comes down to, really, you've got to manage your business well, and you've got to know what your figures are, what your cash position is, and act before it becomes a problem. Because when you do get to that situation, that's when the bank's going to be calling you to pay back, not calling you to lend more money.
That's right. Yeah, exactly. It's really important. If you have to finance, have a good credit score, have your financials up to date. Don't bounce checks, or what we call now dishonoured payments on a bank statement. Have all that under control, and it will be fairly smooth. Maybe not with a bank, but a non-bank, possibly with a bank, but if not, a non-bank lender who's got just as good interest rates. But you've got to make it easy for them.
Yeah. So actually, you've mentioned this credit score a few times now. So let's just get some clarity. What actually is a credit score, and why should a business be concerned about it?
Look, businesses should be very concerned about it, because most lending out there, not all lending, but most lending out there is matrix based, which means there's a score that you need to have above, depending on the lender, as to whether they will approve a deal or not. So a good score, anything over, and this is, I'm referring to Equifax here, which is the major major company that does the credit scores. There's a few others out there, but a good score when you think of Equifax is anything over 700. It means you're in the green. 900 is fantastic. Anything below 500 tells the lender, well, there's a chance that this person's going to default, and the lower the score, the higher the chance of defaulting. And rightly or wrongly, that's what they draw on. They look at that pretty closely. So you've got to protect your credit score like there's no tomorrow. And just recently, I think about a year ago, they introduced comprehensive credit reporting. And what that means is that the banks and the credit card companies are now sharing that information with Equifax. So if you've got a ANZ credit card, or you've got a Macquarie credit card, or you have a mortgage with St. George, that's going to show on your credit file. And if you happen to pay that mortgage late or that credit card payment late, it's going to show on your credit file. If it's more than 15 days, it gets a number put to it. And the longer you take to pay it, not the whole amount, just your minimum payment or your mortgage payment, the higher that number goes. So that's what comprehensive credit reporting is mostly all about, and that just destroys a credit score. I've seen clients go from 700 to 300 by not paying their credit cards on time. And the other major impact, apart from court actions and defaults, obviously, the other major impact on your credit score would be too many inquiries. What they call a busy file. If you're inquiring every month about some sort of finance, that's an issue for the lenders. It just, the algorithm says that you're more likely to default. So it's really important to pay your bills on time, pay your credit cards on time, and don't make too many inquiries. So don't shop around to 10 different lenders all submitting an application on a vehicle.
And I guess that also comes back to why a business would need to use a broker, particularly an asset finance broker, because you can do a lot of that vetting for the client and say, well, hang on, that's not appropriate for you. You're going to get knocked back there, or you need to improve. What's the? I guess is it more successful, or can you prevent some of those false inquiries? Or?
Yeah, for sure. Look, I'm obviously, I obviously feel pretty strongly about people using a broker. But look, it's just a simple matter of if you go to the wrong broker, or you just go, well, I'm with X bank, I'm going to go do it there, and then it's a no, and then you go, well, I'll try that bank and do it there, and it's a no. You're wrecking your credit score, and the first thing they're asking is, well, why has there been 2 inquiries here? So a broker's job is to know what the credit policy is with all those lenders, whatever area that the client fits into, and to know that, all right, they've been around for 1 year or 2 years, or they own property or they don't own property. Where should we take this? So they call it workshopping. They don't submit an application to 3 or 4 different lenders. They just discuss what's going to be the best outcome for the client. And look, with a lot of our clients, we make sure we know what their score is as a broker. We've looked at their credit score without impacting their file, because we're a broker, not a lender. And we see where the best place is to place it. So we save that heartache, and we save a lot of saying to people, look, there's not a solution for you at the moment. And that might be a brand new business. They've only been around for 3 months, and once they get to 6 months, in some instances they can get some finance, or 12 months in another instance. So that's what it's all about. Just taking the hassle out of it for the client.
That's good. So I think, just wrapping it up, I think we've talked about being prepared and planning. So we'll get your finances in order and know where you're at. Do your research, or better still, get a professional to do the research for you. Know exactly what you need, and make sure you make your payments on time.
Yes, yeah, absolutely. And the last thing is, I know there's a lot of uncertainty out there with COVID-19, but if you are putting your finance payments on deferment, do not expect to get more finance. It's not going to happen. It won't impact your credit score, but you will not get finance while your payments are on deferment. And a lot of people didn't realise that.
Because I guess the whole point of putting it on deferment means you don't have the capacity to pay. So
that's right.
Nobody's going to lend you more money if you don't have the capacity to pay.
Yeah, that's how the clients, businesses should have seen it, but they saw it as, well, I've got a bit of a payment holiday here, and I'm not sure what's going to happen, so they whacked it on hold.
Well, some great advice there, Jason. Thanks for your tips, and I'm sure that people are going to benefit from listening to them.
Thank you, Paul. Thanks for having me.
Thanks for listening. Do you have a question you'd like our team of experts to answer? If you do, send your question to podcast@thebusinessbehindyourbusiness.com. To hear more from The Business Behind Your Business, don't forget to subscribe using your favourite podcast player. Or you can visit the businessbehindyourbusiness.com website.